Welcome back. I hope you enjoyed the intermission. And I'd like to discuss now the subject, getting to privatization and funding and how privatization will help address the funding issue. Just to recap slightly, because I want to emphasize, there is a general consensus that the system's going broke. So essentially, we've got, the amount that's coming out, paying out as benefits to people is going to be significantly larger than the amount going in. And this is going to have to be addressed. So fixing this right now has been an issue of, I think it's been a pick your poison discussion, and that's the reason why there has been no progress in resolving the issue, because nobody likes what the potential solutions are. And the solutions have been to either increase taxes or reduce benefits. And I think reducing benefits is something that I probably don't have to argue to this group that we shouldn't do that. I think you probably all feel strongly that benefits should not be reduced. And so then the other side of the question then is, well, you're going to have to increase taxes. If you don't want to reduce benefits, you're going to have to increase taxes. And one of the aspects of Social Security that I don't think is right, and I don't think is good, is the fact that Social Security is actually a regressive tax. It's a tax that falls much more so on lower income people than it does on higher income people, and so therefore, because it's a straight percentage and there's a cap, and so therefore it falls very disproportionately on people at the lower half of the income strata. And so therefore, increasing it and making it a larger tax is going to make that situation even worse. So there's other ways that we would do this, but essentially, people have talked about removing the cap. But the fact is, unless we're actually turned into a progressive tax, that's not going to fix the problem. There aren't enough people earning at the higher rates at this above the cap to actually make a difference, and so that's not going to fix the problem. So you have this situation where Social Security is going to go broke, and right now the only solutions have been to either reduce benefits or increase taxes. So what is privatization going to do? Well, privatization, I think, will help solve the problem, because one of the things what privatization will do is essentially it'll address part of the one half of the function of Social Security that I talked about earlier. It'll address the retirement savings benefit aspect of Social Security. It's not going to address this sort of insurance aspect of Social Security, nor do I think that it should try to. I think that's a function that will need to continue to be provided in essentially the way it is today. Obviously, we're going to have to recalculate or recalibrate the amounts that need to be set aside to do that, and how long people are going to live so that that can be dealt with. And I think that's going to happen. I think ultimately it's my opinion that at a certain point we're going to need to essentially reduce the benefit in one way or another, either by taxing it or means testing it. But I think there's something will have to happen there. That's my opinion. But privatization can go a long ways towards helping with this, and it does so in the following manner. And when you say privatization, I'm not sure what springs to mind for all of you. It could be, depending on your point of view, something that's a horrible mess, or it could be a small program. And I think what I'd like to do is just talk about it at its most fundamental aspect. So the most fundamental aspect of privatization is that when amounts are taken out of your payroll and contributed by your employer under a privatized system, a certain amount of that would be put into an account for you that you would own. So that would become your money, your essentially retirement savings account. And the government could not take that away from you. No one could take that away from you. It would be money that would be available for you when you retired, or if you were to die, it would be available for your estate, for your spouse or your children. They would get the benefit of that. It would not be essentially lost and go as a benefit to someone who just, by either whatever reason, is able to live a really long time. So it would be for your family. And so in that sense, I think privatization does a lot to address the issue of kind of fairness around the distribution of benefits, and it also would help in a significant way to affect funding in the following manner. When individuals would be permitted to put direct the investment that they have, basically in their account, they're able to direct it into investments that earn a significantly higher return, or would earn a significantly higher return over a long period of time. than does essentially what the government is doing today. So essentially today, when the government deducts from your payroll, the government uses that, and it's effectively, the return on that is effectively the return on government bonds, which today the return on 10-year government bonds is around 4%. That's a little bit historically on the low side. Historically, it's been somewhat higher, but never really huge. The return on long-term government debt has, I don't think, ever been much above 10%, and for the most part over the last 40 years, it's probably been around between 4 to 6%. So relatively low return on those investments. Now, individuals who invest could invest in a wide variety of assets that have higher expected returns, and of course with that goes higher risk. You don't get anything for free, or at least us libertarians don't believe that you get anything for free. And if you have a higher return, if you're going to try to achieve a higher return, you're going to have to take on some risk. Now, however, though, the risk, when you're taking on risk, you can mitigate that in a huge way based on the time frame that you're looking. Now, obviously, I think everyone knows that if you had invested in the stock market 2 years ago and looked at what your holdings were today, they'd be worth significantly less. And so over relatively short periods of time, the stock market is extremely risky. That's well understood. And what you may not realize is if you look back over longer periods of time, let's say you look at over a 20-year period, the stock market is not terribly risky because the stock market goes up and down, but over a long period of time, let's say 20 years in this case, the stock market is, I haven't had time to actually go back and check all the numbers on this. I was just a little bit short notice. But if you look over a 20-year period, I believe you will find that the stock market has always outperformed government bonds. So if we think about it, even at the bottom of the recent crisis, I can tell you that the S&P 500, which is an index that I track, the S&P 500 bottomed out at around 670. Now, if you go back to 1991, which is another period I just happen to recall off the top of my head because I was tracking this at the time of the first Gulf War. Prior to the first Gulf War and the recession that sort of kicked off, the S&P was around, I think, around 400. So the S&P at the bottom of the recent financial crisis was at 670, but if you go back, less than 20 years ago, the S&P was 400. So it's sort of 50% higher than it was back then. And you might not, that's something you might not keep track of because it doesn't make big news, but the fact is that over long periods of time, the stock market is almost always going to outperform the government treasury bonds. So what does that mean and how does that help privatization? Well, what it means is that people who are putting money aside in their own accounts and choosing where they're going to invest will have the opportunity to put that money into assets such as stocks, which would have a higher expected return over a long period of time. Obviously, if you're 60 years old, you shouldn't have those assets invested in stocks, but if you're in your 20s or early 30s, it's a very sensible thing to do, and I think you will find if you talk to investment professionals, they would almost universally counsel people in their in their 20s and early 30s that a very large proportion of their retirement savings should be invested in equities. So what that means is those assets will earn higher returns over a long period of time on average, and therefore there will be more money available when the person starts drawing down those assets when they retire. And therefore they're able to, for a essentially smaller amount that they put in, they're able to take essentially the same amount out that we expect. So if under the current Social Security system, let's say a person is expecting to take out, and I'm just going to make these numbers up, let's say they would expect to get a benefit of $1,000 a month, right, down the road. And let's say they're in their 20s today, and we're saying they're going to get $1,000 a month. The amount that they would have to set aside in order to generate that, if they're doing it into a privatized private account where they could invest in equities, would be a much smaller amount that they would need to sort of set aside each paycheck than it would if we were just sort of putting it, being taken out and the government was investing it in treasury. So therefore, they're able to take that smaller amount, put it aside, and then the remaining amount that is being sort of still kept by the government is used to basically deal directly with this and solve this sort of insurance aspect of Social Security. So in that sense, privatization is able to help solve the funding problem. Now, I haven't done enough of the analysis to say whether it completely solve the funding problem, but I think it will certainly go a long ways towards helping that.